Good evening, all. Ira Epstein, and here we are with your Tuesday evening Spider ETF report for this Tuesday, November 25th, 2025, and the time right now, just about 6:05 p.m. Central Time. Well, as you can see, the stock indices were all solidly up today. Take a look at this. Just about everything higher. Uber came back from down about $1 or so and managed to close unchanged. As we take a look at copper, unchanged, but gold backed off after making a new high on the move, and that's why I wanted you to take half profit the other day. If you get my advice, I take my Spider ETF subscriber video, and you did pretty good, and you're still ahead beautifully, about $8-9 a share there. When we take a look at AMC, just going nowhere. Boeing came roaring back from a 177.5 number to 182.44. Tesla came back after dropping towards the 406 area, managed to put out another close, not a monster move, but still a pretty good move. Amazon gained about $3.40 a share. Netflix can't get out of its own way. Apple's still doing well. And word that Kevin Hassett is the lead contender out of the White House. Now, you hear reports all the time, but that was today's report, that he is the lead man at this point. And Scott Bessent this morning, our Treasury Secretary, said that the president would make the Fed chair announcement before we get to Christmas. So we'll see. But the market liked Kevin, and it really turned things around more than the news turned things around today. At least that's my opinion on it. In terms of news for tomorrow, you're going to get the Mortgage Bankers Association. Advanced Durable Goods report will come out at 7:30. The jobless claims will come out at 7:30 as well. November Chicago PMI number, that'll come out at 8:45. You can see that we're going to get the EI natural gas storage report at 11. But before that, around 9:30 in the morning, we'll get the EIA report on the crude oil stocks and the products. And then we're going to cap off the afternoon by getting the beige book of economic conditions, and that'll come out at 1 o'clock p.m. Central Time. So we've been studying Google, and obviously with all these chips and all the products coming out, Alphabet's getting a big bid. We have a gap in the chart here as the market, unlike here where it tried to fill it, we have one open. When you get a correction, eventually you'll probably make a run to try to fill that gap. The swing line number has got the pattern of higher lows, higher highs, still looking very good. As we look at the moving averages, this is the 18-day average. This is the 100 and the 200. Somehow I lost them on here. I don't know why, but I'm using, as you know, a backup computer. My wife and I are moving our home. Not physically, but we bought a different home. And I'm working literally at the kitchen table as my office all gets packed up. Tomorrow we have packers coming in and everything, and then we start the move next week. So it'll get very exciting here for me. When we take a look at the Bollinger Band, we've been over it. So now you're starting to get one of these markets that has the Gorilla Glue trade. I want you to study this. You hit the Bollinger Band here, right? So day 1, then 2, 3, and now you're away from it. So you're running this band. And as you run it, you always look to see, does that force an embedded reading? Not yet. So I think Google's getting actually a little ahead of itself. Doesn't mean it can't go higher, but it's probably due to give you a small correction. Remember, tomorrow's the last full day, and then we go into the Thanksgiving holiday, and you'll come back to very abbreviated trading on Friday. When we take a look at Meta, you can see how this market came down and got back over the 18-day average. Now, it hasn't been able to do that since all the way back here on October 29th. So this is fairly impressive. It looks like we got a trading bottom setting up. Trading bottom isn't the trend to the upside, but it means you no longer want to be bearish. And in Dutch Brothers, you went down to the Bollinger Band. You had a failure yesterday against the 18-day average, and you came alive. So now if the market wants to rally, because the trend, once it got through this high right here of the November 21st, after a down day, you kick the trend back up. The upside targets now the Bollinger Band and the combination of the 100-day average, momentum up, bias up, and until the market takes out the lows of yesterday, right here, the 24th, the trend stays that way temporarily. In Roku, it's interesting. When I was at, obviously, at Best Buy, I'm looking at Roku TVs and Hisense and all the new brands that are coming out. TVs are today's commodity. You can buy a 100-inch TV for under $2,000 at right now. I think that's phenomenal. The quality looks phenomenal, so on and so forth. That's what I'm looking for. And as I look at how the market is doing this, you got the lower highs, lower lows, and bingo, right into the 100-day average. And as I said to you yesterday, on rallies, the 100-day, which tried to be support, is now going to try to be resistance. Did we lose the bearish embedded reading? No, you're still bearish embedded. If you lose it, you have to be up like one of these numbers up here, something like that, to say that maybe the 18-day average is where you're going to. Netflix is making a case, to me at least, that it doesn't want to keep going down. It's staying at the Bollinger Band. It's oversold. That's not a buy signal, but it's certainly not a signal to be short. In Uber, we have lower highs, lower lows. It's back into the Bollinger Band, going to the right-hand side. It's got a bearish embedded reading. It's shown no sign yet that the downtrend is over. In Tesla, with all the rally that we've had, we still haven't gotten back to the 18-day average of closes. Now, if you were to get over the 24th, Monday's high of 26.69, and close over wherever the 18-day average is, now 425.90, that would be a bullish sign. Let's see if it can do that or not. Joby had a small rally today. I mean, the whole market's rallying 2 days in a row, and you're getting a nickel rally. It's not impressive. When we look at the financial sector, it changed its whole posture. If I come back with you like this, you had coming in lower highs and higher lows, and all of a sudden with today's action, the market throws itself back into an uptrend. Now, that uptrend's interesting. Is it a buy signal? Not yet. We'll have to look at the daily charts and so on, which I'll do with you in the morning. When we take a look at XLI, lower highs, lower lows, I mentioned yesterday that if we had a rally, it was probably going to be the combination of the 18-day average and the 100 that might offer the resistance. It's exactly what the market did. It has to get over 452.72 to negate the downtrend. When we come over to XLE, we have lower highs, lower lows. The market went down yesterday, Monday, and hit the 100-day average for the first time since all the way back over here, November 4th, and found some support. That's basically all you can say. The trend is down, the bias is down, any move under right here, 87.79, opens the door to go wherever the Bollinger Band is, and I don't see anything that can turn the chart bullish at this point. In the gold market, the question is, can you make it up to the upper Bollinger Band? I certainly don't want to see the market get back under these lows right through here, but as long as it doesn't, the trend is up, the bias is up, it's still saying it can go higher. Palantir is not saying that. It's lower highs, lower lows. Now, if the market can clear and get over the highs of Monday of 165.17, we could, for the first time, get a pattern in a while where you get higher lows and then a higher high. I am not saying that's a buy signal. What I am clearly saying is it's a signal not to be short anymore, if that occurs. In Microsoft, you had a key reversal outside day to the upside. The ideal thing would be to lose the bearish embedded reading. Then I think you can make an argument that Microsoft has seen the correction, it's ended, and the market's ready to go back towards the 18-day average. I'm waiting to see if that occurs. BND up into the Bollinger Band. Obviously, that and TLT taken off to the upside, as Kevin Hassett just was saying on the 20th, that he looks for the Fed to make another rate cut in December. So the market loves what it heard there. In the dollar, you fell back to the 18-day average. That means that the Bollinger Band has stopped this rally. The market is seeing momentum turn down. I think the pros came out of the market. We talked about, could we get down to the Bollinger Band in the FXE, and you couldn't. And once you took out the previous high right here, which you did today, at 106.57, you ended that bear trend in the market. So when you put it all together, that's basically what I'm seeing. This will fill in a little bit here, but that's basically where we're at. So you've got these reports. What's the market going to do in front of everything? Keep in the back of your mind that if you want to get any of my information, you move your cursor to the top here or over here. If you move it on there, you'll be able to do everything you want, clicking the link on YouTube, and that'll take you to our website where you can sign up for all this information. In the meantime, I'm Ira Epstein. You have yourselves a great day.